Welcome back onto Corporate Conversations then, and the management of Cosmo First is joining in right now to talk about what are the demand trends looking like for this quarter and for the rest of the year as well. We are being joined by Group CEO Pankaj Poddar to discuss more on this and the outlook going forward as well. Mr. Poddar, good morning. Thank you so much for joining in. We are almost coming to the end of the second quarter. How has business looked like this time around? Not to ask you for specific numbers, but has this quarter been better than the first quarter that you had? And of course, part two of my question being, have your spreads across your various film lines improved as well?
Yeah, so this quarter is looking better for multiple reasons. First, the good news is that raw material prices and oil prices are coming down, which is always very good for the industry because it brings down the working capital and also makes films cheaper versus other substitutes. Demand is growing well, and therefore the margins are also looking healthy both for BOPP and BOPET. The specialty is also growing nicely for us. BOPP is now clocking 70% plus month over month. BOPET specialty also has started doing 20% plus. And then all the new businesses that we have started are also tracking well for us. Chemical business is now making a monthly EBITDA of close to 3 crore and a monthly sale of close to 15-16 crore. Similarly, plastic is now touching a run rate of close to 4 to 5 CR per month, and it looks like that plastic business will also start making EBITDA positive from Q4 of this year. And similarly, Cosmo Sunshield, the trials are going very well, and we expect to commercially launch this product within next 2 quarters. Coming to Ziggly, which is our pet care business, that business also we have been cutting down our losses, and now we are back in a mode of growth. So we have now 25 centers, and both our online and offline is growing. We have significantly reduced our losses by close to 40% on that business, and we are tracking very well from a growth perspective. There is a month-on-month growth of close to 6-7% in that business.
Okay, so Mr. Poddar, you've given us an overview of the entire business. Now we have to get specific. Q1, you did indicate that realizations have improved, and that is something that has happened in Q2 as well. Realizations on an average, including specialty films, was around 35 to 36 rupees per kg. Can you give us a sense of whether it has moved up from those levels in Q2 and by how much? And is this a trend which is expected to continue? Because so far we were talking about supply-demand mismatch. Has that started moving in the positive direction across the industry?
Yes, so see, margins are going up, though for Cosmo, much more important is our specialty growth, where, as I said earlier, that BOPP is now 70% plus and BOPET is 20% plus. But in general, yes, this quarter margins are better than the last quarter, and demand continues to grow for this industry. There's a better stability in the exports market as well, whether we talk about America or Europe. So in general, things are good, but then obviously, you always have some more capacities coming up, in the times ahead, and that temporarily impacts the margins, and then you again have. So we have to, kind of acknowledge that this industry, especially the film one, is a cyclical industry, and one of our key targets is to take out Cosmo completely out of this cyclicality over a period of time, and that is the reason we have been focusing so much on specialty business. So BOPP now we are close to 70% of our volumes into specialty, and BOPET also the tracking is going nicely.
So how much have those margins improved by? If you can give us a ballpark number, 10%, 20%, and is this a sustainable trend?
Yes, so see, margins.
Specialty bit.
Yes, specialty for sure. I have in the past indicated that they tend to stay, 2 to 4 times of commodity margins. And, if we see a long-term average, they are normally 2.5 times of commodity margins, because commodity margins keep changing while specialty margins are far more stable. So given that we have started tracking, last year we were tracking at close to 60%. And this year we are now, if we talk about first 6 months, we're tracking close to 67, 68%. And last couple of months, we are tracking 70% plus. So these things will certainly help improving our margins. They are showing in our profitability trends as well. And that is our key focus for the company.
Mr. Poddar, you mentioned bringing Cosmo out of the cyclicality in the near future. Is there a timeline that you have set that this is by when you want to do that? And also your CPP line, is that on track to be commissioned by the third quarter this year? And how much would the initial revenue contribution be in this financial year itself?
Yeah, so see, given the fact that we're bringing more capacity even on BOPP next year, so these percentages will look lesser once the new line comes up, though the absolute volume numbers are continuously going up. We had targeted that we will touch 80% because taking it beyond 80% becomes very difficult because of the fact that you have some customers. So we are tracking well. This year end itself, we should be 75% on BOPP and 25% on BOPET. And, other than the fact that new volumes would come up, on the past volumes, we should be moving to 80% next year itself. Coming to your second question in terms of, sorry, can you repeat your second question?
That's the CPP line, Mr. Poddar.
Yeah. So the CPP line has been commercialized already, and obviously it will take us some time to fill this capacity. CPP will help us make the structures for brands more sustainable, more cyclable, and recyclable as such. And the initial traction is good. We are working a lot of big FMCG brands to give them more sustainable structures. And we are happy with the initial progress that we have made, and it will continue to happen in the near future as well.
Okay, so if not at the full, of course, you wouldn't be able to get the full capacity utilization this time around. By end of this year, what kind of revenue addition would you see from the CPP line itself? And the second part of the question is the cost-saving initiatives that you've taken, the renewable power and Korea plant moving to India to cut costs. Has that already started flowing to your bottom line, the cost savings that you've spoken about earlier?
Yeah, so the Korea one has already started flowing because there's close to $1 million saving coming because of that reason itself, because we have shifted the production. Similarly, renewable power also, some part of it is already done. We are hovering between 40 to 50% of our total power requirement coming from renewables, and a couple of more agreements are in the pipeline. We are expecting that in a year's time, we should be drawing 70% of our power from renewable, which is one side make us more sustainable, and on the other side, it also gives us cost reduction. And given the fact that our demand is so much stable, we can certainly afford to have a very high percentage of sustainable power and renewable power in our portfolio.
All right, Mr. Poddar, thank you so much for sparing time and joining us to talk about your road ahead for the remaining quarters of FY25. That was the management of Cosmo First speaking to us on the road ahead. By the way,